Brandon,
Yes.
thank you so much for being here.
Absolutely.
I'm so excited. Insurance is one of those things where you don't talk about it a lot, so when you have an opportunity to get a lot of knowledge, I'm very excited. I have a handful of questions for you.
Absolutely.
But before we get into that, tell me a little bit about you, what you do, and how long you've been doing it.
So I've been in the financial space for roughly about 5 years now, a little over 5 years. And a little bit about me, actually, I think it's very important to understand why I got involved in the financial space, because I never saw myself as a financial person, never saw myself being in the financial services industry, let alone insurance.
Right.
But I think one of the biggest things that I found was the lack of financial education happening in Canada. And just from a personal experience where I was actually helped out financially, I saw an opportunity for me to go spread the message in my community, and that's why I got involved in it. And I think financial education in Canada has been lacking for decades and decades.
Oh, yes.
And coming from an immigrant family, my parents immigrated from South America, Guyana, if you know anyone from there. No one ever taught them about money. And what usually happens is the immigrants and the people that are coming from different countries, they're the one that actually get taken advantage of when it comes to personal finance. So we wanted to basically correct an injustice of what's kind of happening. And that's kind of a little bit about myself. I grew up in Cambridge. I don't know if you want to know the year I'm born, but I grew up in Cambridge, and we're just trying to correct the injustice in the financial industry in Canada.
You mentioned financial education, and that's one of the values of my business that I hold very high standard of, because I believe financial literacy is down the drain. We don't get taught anything about it in school. It truly is up to our own desire to learn. And unless you're put in front of the right people or researching the right things, there is no means for us to learn this stuff.
Absolutely.
So I'm really excited to start picking your brain about insurance, because as a mortgage agent, insurance is a big piece of the puzzle.
It is.
But I'm not the professional, and I know there's a lot of different types of insurances. And so I wanted to start by getting you to explain the difference between creditor insurance and personal insurance.
So that's a great question. So with creditor insurance, the cool thing about creditor insurance is better than no insurance. Right. So that's one thing you have to. So if you do have creditor insurance or in any sort of way, it's still good than having no insurance. But it's always good to have personal insurance over creditor insurance. And the reason why, the best way I can really explain creditor insurance is, typically when people get into a home, if I'm talking to your industry, typically if people get into a home, they want to make sure that they protect the home. If something happens to them, they want to make sure that their family's taken care of. In terms of mortgage-wise, they don't have to be on the hook for the mortgage payment. The challenge with creditor protection or mortgage protection, when it comes to that, there's other creditor protections like loans and stuff like that. But when it comes to a mortgage, one of the challenges is very limited to what it can actually pay out. So there's a couple things you have to look out for when it comes to mortgage protection. One is what actually happens is they actually do something called post-claim underwriting, which means that, let's just say you and your husband bought a home, you guys were able to get mortgage insurance or creditor protection, whatever it may be, and something happened to your husband. Well, what actually happens is he doesn't qualify until after he passes away. So they do something called post-claim underwriting, making sure that any of the medical questions, if he answered, like maybe if he got his blood pressure done, or maybe he said he doesn't take a certain medication, what actually happens is they can actually say, well, if I found out that husband has X, Y, Z, we're actually not going to approve you for the insurance.
Wow.
So which is a scary part to do with insurance. At the end of the day, insurance is basically for one thing: peace of mind. And with creditor protection, you actually don't get that. It's almost kind of like paying for car insurance and not knowing if you're covered until after you get into an accident. Right. So most people won't do that.
Creditor insurance too, it's more to protect the person that is giving you the financing versus protecting you as an individual.
Absolutely. It's there to protect the lender.
Exactly.
Because the beneficiary is actually not the
you.
loved one.
It's the bank. Right.
Exactly. So
people don't understand that.
That's one of the challenges. Another thing to actually look at too as well is that you're paying for something that's depreciating. So like, let's say my premium's $100 a month protecting a $400,000 home. Well, what's the goal for a mortgage? Is over time to pay it down. right? Well, over time, if my mortgage drops from 400 to 300,000, I'm still technically paying that $100 premium, but now I'm protecting a depreciating asset, right? So where with life insurance or personal protection, you can actually customize it to how your mortgage goes down, so you actually pay less premiums over time. So
your monthly payment would change as your balance decreases for personal insurance versus creditor.
Exactly.
Right.
Exactly.
Oh, that's interesting. That's an interesting thing to. So we're talking a lot about different kinds of insurances.
Yeah.
And I know there's a ton out there.
There is.
But I'm sure you have a recommendation on one that everybody needs to have. So I'd love to hear your thoughts on that.
Yeah. So the insurance industry is a very complex industry. I think there's a lot of misconception when it comes to talking about insurance and stuff like that. So there's tons of insurance. The one I would recommend, without getting into too much detail, but the one that I would recommend that the only insurance that people need to have is term insurance. The reason why is because most people need to have lots of coverage, where in the other areas of insurance, like permanent insurance, you have to pay a lot of money for those types of things.
Right.
With term insurance, it's extremely affordable. You can get the amount you actually need. Most Canadians are actually underinsured when it comes to making sure that they have the right amount of coverage. Term insurance allows them, because it's so affordable, allows them to get the right type, so they can actually get $1 million, $2 million for an affordable price.
Right.
That really puts them in a position where if something did happen prematurely, their family would actually be taken care of. But the reason why I say term insurance is the only product someone should own in terms of protecting their assets and protecting their income is because the goal for insurance is to protect for a peace of mind if something happened prematurely.
Right.
But the goal of the individual is actually to buy time in the market where they can actually become self-insured. Right. So if I can share an example.
Sure.
If you bought a $400,000 home, right now, if you bought a $400,000 home, that's a liability.
Yes.
Right? So, and the income that you bring into the house, all those types of things, people depend on your income.
Right.
So the house is a liability, so you want to make sure you protect it. So maybe you get $400,000 of life insurance available, right? So that's what you get. Now, over time, that home becomes more of the 400,000 decreases. So instead of becoming a liability, it actually becomes an asset. Right? So, and maybe worth 20, 30 years from now, maybe worth 800,000, right? So the goal is that by the end of your term insurance ends, you actually have more assets than you have liabilities, and you actually become self-insured. Because if something did happen to you, well, then you have equity in the home, and you have money saved up, and you have those things saved up where you can actually take care of yourself if something were to happen to you. I don't know if that kind of makes sense. But
so term insurance, when I think of insurance, I think of two that everyone kind of knows. You got term and you got life.
Yeah.
Tell me the difference between the two.
So term and whole life?
Yes.
Yeah. So whole life insurance is a form of permanent insurance. So when you buy whole life, you're paying for two things, okay? Because one of the fears of insurances is that I'm paying a premium, and if something doesn't happen to me, well, then all my premiums go to waste. Right. So that's what people say about term insurance. They say, well, after the term, if I don't die, I have no money, so I just wasted all that premium. Well, it's kind of like car insurance, right? In 10 years, if you don't get into an accident, does your car insurance company say, hey, you know what?
We're going to refund you.
Yeah, we're going to refund you 5 years of your premium. They don't do that, right? It's pure insurance.
Right.
With whole life, the industry, what they saw a way to squeeze more money out of the client. So you're paying for two things. One, you have your insurance, which you call your death benefit. So if you died, let's say you had $100,000 of coverage. If you died, the $100,000 will go directly to your family.
Right.
And then the other portion is a savings portion. They also call it a cash value. So over time, that cash value increases over time. But the challenge is let's just say you have $100,000 of coverage and you have $20,000 saved up over time. Right. If you pass away, how much should your family get?
$120,000?
That's what most people would say. My family would get $120,000, but that's not how those whole life plans work.
Okay.
You pay for two things, but you only get one. So the company is only legally obligated to pay the death benefit, which is the $100,000. The remaining $20,000 goes directly back to the company. And
almost like a profit for giving you the $100,000.
Exactly. And also, if you magically knew the day you were gonna die, let's say you were like, I'm gonna die tomorrow, I'm gonna take out my $20,000. Well, what actually happens is it cancels the life insurance policy.
So the 20,000 is almost used as a security blanket for the insurance company.
Yeah, it is.
You could look at it that way.
Yeah, absolutely. So it's just, and the way it's sold, it's not sold where you pay for two things and only get one, because then no one would ever buy it. But it's extremely expensive, and the way the plans are usually structured are never in the best interest of the client.
Right.
They don't really only benefits one person, the person selling it, because there's a lot of commissions that are paid out to the insurance industry when it comes to that.
Right. So what's preventing the middle class Canadian from becoming financially free?
So that's a great question. I think what's preventing them from becoming financially independent, financially free, is one, the confusion when it comes to money.
Right.
I think the industry has an obligation to properly educate, has a responsibility, almost like a duty, to properly educate the middle class. And I think the middle class person is the one that's getting completely ignored.
Absolutely.
You know, the rich, they understand it.
The poor's getting the help.
Yeah, exactly. They already have the assistance,
Yep.
right? And all those types of things. But the middle class, they can be completely ignored when it comes to finances. And I think as the financial services industry, all they've been doing traditionally has been squeezing them out of money. And I think confusion is one of them, which is preventing a lot of people from getting financially free, and overpaying in insurance premiums and in different types of insurances. I mean, there's insurances on not only just mortgages and stuff like that, but there's also insurances on payday loans, lines of credits, all these types of things that most of the people don't know that they're even paying.
Creditor insurance that we were talking about.
Yeah, exactly. Creditor insurance, all those types of things that people don't know that they're paying for. And what's actually happening is those dollars are all going to their premiums. None of it is actually going to them first, right? So you have most people not paying themselves first, investing money for themselves in their future, and that's preventing them from getting financially free when it comes to that. But the other thing is also income, right? Our wages have stayed flat for decades and decades and decades.
Cost of living has done this, and salaries have done this.
Exactly. So there's really traditionally, you know, financial institutions like banks haven't really, you know, took the responsibility of helping people get out of that whole treadmill of trying to get ahead financially and putting people in the place.
I agree with that.
You know what I mean?
Very much.
But yeah, I think that's what's preventing most people.
Yeah. So what you'll hear from me all the time is that it's so important to have a team of individuals that are on your side, that have your best interest at heart for long-term success. You always have tomorrow to be a part of your decision making today.
Absolutely.
So if someone was going to sit down with you for a first time and figure out what their best options were, what should they expect from you? What information do they need to bring to you? What would a first meeting look like?
So yeah, I think biggest thing, open mind. And be ready to just talk about money. And I think if the more we talk about money, going back to my own experience, we never talked about money on the kitchen table. You know, my parents never talked about that.
Taboo.
You know what I mean? I didn't talk to that, like my cousins and my family. We didn't talk about that kind of stuff. And I think talking about it allows you to understand where you're at.
Oh, absolutely.
And then understand where you want to go. Right? Because I think we live in a world where information is completely accessible, and knowing the information is no longer enough. It's applying the information that we kind of receive, right? So, and there's just tons of stuff on social media you'll see. And one other thing is ask questions. I think a
60-second clip you see on Instagram isn't enough.
It
may be enough to get the wheels turning and may educate you enough to ask questions, but we really need to take control of our futures, ask the right questions, and it's also up to you to answer the questions that we don't even know to ask. But that's the importance of finding a proper person who genuinely cares, because all of these creditor insurance or these other insurance products that you can get, they got one thing and one thing in mind, and it's the sales report that's going to come out that I sold this product.
Actually, I'm glad you brought that up, because for the people who are going to watch this, CBC Marketplace actually did a investigative video. CBC, I don't know if you ever watched CBC.
Oh yes, they do a couple on mortgages too.
Exactly. So they have a beautiful video, a fantastic video explaining how mortgage life insurance works, and how they have a lot of sales quotas and sales targets for these people to hit. So, and it's nothing against the person selling it.
Right.
Because most people, the people in the industry also do not know how these products work. Right? So it's really a lack of education just trickling down all the way
top of the ladder,
to the consumer, and the consumer's are the ones that gets the bad end of the stick all the time. Right? So it's just that trickle of lack of financial education and understanding how these products actually work.
We see that in the mortgage space all the time.
Yeah.
Some of the specialists that you see at the bank are being trained by someone who doesn't understand the product, and it trickles down from there. We see that a lot. So I could not agree more with all of this.
Yeah.
I have gotten so much great information from you.
Sure.
We're gonna link that CBC article down on the YouTube so that people can watch that and see the structure of sales and how salesy this industry can be, and why it's so important to have an insurance agent that's on your side, truly working for you.
Yeah, that would be awesome.
So I really appreciate your time here.
Absolutely.
It was
Thank
great.
you so much.
Thank you so much.